Hello and welcome to the look ahead for Friday, the 8th of March, with me, Fiona Cincotta, Senior Market Analyst at City Index. So, a couple of points to be watching out for tomorrow. First up will be German industrial production. We've also got Eurozone GDP data due. This is the final reading, so it's not expected to be massively market moving. However, it is expected to confirm that the Eurozone economy avoided a recession in the final quarter of last year. Now, just with that in mind, we'll be looking at the DAX. I mean, just as far as the performance of the German economy is doing right now, we know that the German economy has suffered more than its Eurozone European peers. We saw factory data today showed a slump in factory orders. We've seen PMI data for the region continue to be weak, and yet the DAX is trading at all-time highs today. What's going on here is expectations that the ECB and the Federal Reserve will start cutting interest rates soon has helped boost stocks higher. Today, for example, we had the ECB leave interest rates on hold at the record high, but they also cut the inflation forecast for this year. So that's sort of giving the indication that they could be moving towards cutting interest rates sooner rather than later, even though they're actually reluctant to go ahead and start talking about when they're going to start cuts. We know that Christine Lagarde still remains a little bit cautious as far as service sector inflation is concerned. We saw the service sector PMIs for the Eurozone region tick higher. Also, there are some concerns over the tight labour market in the Eurozone, which Christine Lagarde has said could keep inflationary pressures elevated. So as far as the DAX is concerned, it's as I said, trading at an all-time high. It's taken out the previous all-time high of 17,817, and it's trading up around 8,880 at the time that this was being done. Bulls are going to look to try and push that price up towards 18,000. That's the next key level. Do watch RSI, very overbought, so we could see a period of consolidation or a pullback. I mean, as far as support is concerned, the weekly low, that's around the 7,620 level, and then you've also got the 20 SMA, which is around the 17,350 level. That's also around the same level as the rising trend line support. Other thing that we've got going on tomorrow is obviously US non-farm payrolls. Now, there's been a lot of focus this week on the health of the US economy, what Jerome Powell thinks as far as the outlook for interest rates are concerned. And I mean, what we're expecting to see tomorrow is that there were around 200,000 jobs created in the US in February. That's down just slightly from the very strong number that we saw last month, 350,000. Meanwhile, unemployment is expected to hold steady around the 3.7 level, and wage growth, importantly, is expected to just ease slightly to around 0.3%. That's down from 0.6%. You know, we've heard that Powell has said that the Federal Reserve looks to be cutting interest rates this year. However, he also said that policymakers want to see more evidence that inflation is cooling towards the 2% target. So if we do see a slowdown in wage growth, then that's going to help support those views that inflation could be cooling. Also, you know, I think the Fed's going to want to see some cooling of the labour market over the coming couple of months before it really commits to cutting interest rates. Now, as far as the S&P 500 is concerned, again, just on the brink of all-time highs there at 5150. Buyers are going to be looking to 5200. As far as support is concerned, I think the first level of support there is around 5050, which is the weekly low. If we get a move below that level, that will create a lower low. Also, just be wary there. We've got the various divergence with the RSI, so that could suggest that stocks might struggle to move much higher. But I mean, for the time being, as I said, we are at creating higher highs and pushing on to record levels. The other one just to watch here as well is the euro US dollar. I mean, obviously, as we've got tomorrow, we've got GDP data from Eurozone. We've also got the US non-farm payrolls. Also, we had ECB today, Fed Jerome Powell testifying twice this week. So there's quite a lot to be watching for. Interestingly, I think as far as the euro US dollar is concerned, we've seen a further weakening of the US dollar and a strengthening in the euro. So I think this is more of a dollar weakness story than it is necessarily a euro strength story. We're seeing this at 109. Normally, if the ECB were cutting their inflation forecast, we'd expect the euro to perhaps fall against the US dollar. But as we can see, there's sort of different reactions going on in the FX market compared to the equities market. Euro is actually pushed higher here. It's testing that 109 level. A rise above 109. In fact, it has risen above 109 now, and it's looking towards that 109.30. Which is the February or late January high. So if we get a rise above 109.30, that's going to bring 110 psychological level into play. As far as sport's concerned, still watching that support on the 200 SMA at 108.25. That will be a key level for the bears to break down if they want to see this move lower. And so just finally, worth having a look here at what's going on with the US dollar index. As I said, we've seen some weakening in the US dollar index, despite the fact that I think there is some signs that the Fed is starting to push back a little bit on a June rate cut. But, we've had some weaker data come in this week. ADP payrolls came in below expectations. JOLTS job openings showed some weakness in the jobs, openings. And also we saw an increase in, jobless claims come in weaker than expected. So I think that's one of the things that the dollar is grabbing onto, that the next move actually by the Fed will be a rate cut, although there is still some uncertainty surrounding timings. As far as the chart here is concerned, we can see the dollar index run into a high there at 105. Since then, it has been trending lower, currently testing 103. That's a level that offered support on several occasions across the past 12 months. If we do see a break through that level due to weak non-farm payroll results tomorrow, then that brings the 102 level into focus. Strong data tomorrow showing resilience in the US labor market. We're probably going to see, we could see the US dollar bounce. That'll be back up towards the 200 SMA at 103.75. So thank you very much for watching. I hope you liked what you've seen. If you do, then please do give this video a like, and also do follow if you'd like to receive more videos like this. Thank you.